There is a young Amish man in Lancaster County who bought his first piece of land at age 26. He did not inherit it. His parents did not give him a down payment. He did not take out a 30-year mortgage from a bank. He worked as a cabinet maker for 7 years, lived in rented rooms, and practiced every principle that could be practiced without land. He built the fermentation culture, the medicine cabinet, the community network, and the family book. At 26, he bought 3 acres from an elderly farmer who sold below market value because the young man had contributed labor for years. The transaction was supported by a community lending arrangement at 0 interest. Total cash required at closing was only $8,000. He moved his fermentation crocks, family book, tool collection, and worm bin to the property in the same truck. This video is about the transition, from the rental apartment practices to the first land, from the signal to the amplifier. It is a documented, repeatable set of strategies the Amish community has refined across 300 years of continuous practice. The question is not, how do I afford it? It's, how do I earn the right relationship with land so it comes to me on terms I can honor? The standard American approach treats land as a commodity. You find what you can borrow, take the loan, and manage the spread for 30 years. A $200,000 mortgage at 7% interest requires a monthly payment of $1,330. Over 30 years, total payments are $479,000. The interest cost is 139% of the purchase price. The Amish community transaction cost $22,000. The bank mortgage cost $479,000. The difference is $457,000. This massive difference comes from the financing structure alone. It's about land as a foundation, not as a real estate investment. The Amish community lending system is not sophisticated in the financial sense. It requires no actuarial analysis, no credit scoring, no underwriting or securitization. It requires only that the community knows the borrower well enough to extend trust, and that the borrower's track record makes that trust reasonable. The financial system replaced this with algorithms that predict creditworthiness from credit history, income documentation, and debt-to-income ratios. The algorithms are more scalable. They are not more effective at identifying trustworthy borrowers. They are more effective at generating fee income for intermediaries. The Amish community lending system generates 0 fee income. That is precisely why it works better for the borrower, and why the financial system replaced it. The land price inflation history that the young Lancaster County cabinet maker navigated is worth describing because it is the context for every land acquisition discussion. Most people who want to acquire land feel priced out by a price appreciation trend that they did not create and did not benefit from. American agricultural land prices have increased by approximately 400% in real inflation-adjusted terms since 1970. The increase is not uniform across regions. Lancaster County agricultural land that sold for $500 per acre in 1970 sells for $15,000 to $25,000 per acre today. The primary drivers are institutional investment, federal subsidy structures, low interest rate monetary policy, and the genuine scarcity of productive land near population centers. The young Amish cabinet maker navigated this environment not by outcompeting institutional investors, but by operating outside the market through a community transaction. The below-market sale from the elderly community member was not a market failure. It was the market being bypassed by a relationship. The Amish community has been bypassing the land market through relationship-based transactions for as long as land has been sold in Lancaster County. The community's land retention rate is dramatically higher than purely market transactions. The community is the market. The relationship is the price discovery mechanism. The Amish approach treats land as a relationship. You earn it through demonstrated competence and trustworthiness in the community where the land exists. The community facilitates the transition at terms that reflect your relationship rather than your creditworthiness with a bank. The land comes through your built relationships. That is a description of the ideal Amish transition. Not every Amish land acquisition works exactly this way. Some young Amish families do take bank mortgages, Some buy land from outside their immediate community. Some pay market price. But the community-facilitated below-market transaction with zero-interest community lending is common enough to represent a genuine strategy rather than an exceptional case. And the principles behind it, earning relationships that produce favorable transaction terms through demonstrated trustworthiness, are applicable to anyone. Let me describe the specific preparation strategy that makes this transition possible. Because the 7 years the Lancaster County cabinetmaker spent were not random. They were intentionally structured years of building specific assets. The financial asset, he saved. Not invested in the market, saved. In a specific, dedicated credit union account. He saved approximately 15% of his income over 7 years, totaling $47,250. After closing, he had nearly $40,000 remaining for infrastructure. The root cellar, the first beehives, the first garden bed, the first small barn. The skill asset. 7 years of cabinet making. Working alongside other craftsmen and learning construction and repair skills that every farm property requires. He could build a simple structure before he had a property to build it on. He could repair everything on a property before he owned one. The knowledge asset. 7 years of maintaining records. 7 years of attending the community's work frolics on other people's properties. By the time he owned land, he knew how to establish systems from having participated in building and maintaining them. The knowledge was in his body. The relationship asset. 5 years of contributing labor to the elderly farmer who eventually sold him land below market value. Modern approaches treat land acquisition as a financial transaction between strangers, rather than as a social transaction between community members. The young man helped because the community's mutual aid system expected it, and because the relationship was valuable, independent of any financial benefit. The below-market sale was the elderly farmer's recognition of a relationship that had been genuine and reciprocal for 5 years. It was the expression of trust between a community member who had land and one who had demonstrated the character to steward it well. That kind of relationship cannot be manufactured. It cannot be engineered for the specific purpose of obtaining a favorable land transaction. It is only produced by genuine participation in a community over genuine time. But for the person who is genuinely participating in their community's network for genuine reasons, the favorable land transaction is an outcome that community membership produces as a natural consequence. Now let me describe the specific land characteristics that make a first acquisition most productive for implementing the systems described in this series. Because not all land is equally suited to the complete Amish system, and the land acquisition decision is one of the most consequential decisions for all the decades that follow. Water. The single most important land characteristic for the complete system is water. Specifically, a permanent water source. A spring, a stream, a shallow aquifer accessible through a driven point well, a seasonal creek. Every water system described in this series requires a water source that is accessible without depending on municipal supply. Land without accessible water requires the household to depend on the municipal supply indefinitely for the water systems described in earlier videos. Land with a spring producing 5 gallons per minute is more valuable for the complete system than land with twice the acreage and no water. South-facing slope. The passive solar systems, the earth tube system, and the thermal mass building system all perform better on a south-facing slope. North-facing land costs less in most markets. It produces less in most energy and food production contexts. The price differential is worth paying for the south-facing slope when the household intends to implement the complete system. Mature hardwood. The mushroom log system requires hardwood. The biochar system requires organic material. The building system benefits from locally available timber. Land with mature hardwood is land with decades of accumulated biomass. The value of existing mature hardwood is dramatically underpriced because timber value is typically assessed at wholesale logging prices. Existing soil quality. Good soil is 20 years of biological development. Poor soil, heavily worked with depleted biology, requires 5 to 7 years of serious biochar and biological management to recover, but starting with better soil reduces the establishment timeline significantly. Infrastructure. What is already there? A functional barn, an existing root cellar, a house orientation that permits passive solar modification, an existing orchard, or established perennial plantings, wells and water systems already in place. Infrastructure that exists at acquisition reduces the initial capital requirement significantly because the household does not have to build it. The Amish community's preference for purchasing land with existing infrastructure rather than raw land reflects this principle. The young Lancaster County cabinetmaker purchased land with an existing house and barn. He did not need to build either. His initial investment was for the root cellar, garden beds, and beehives rather than for the primary agricultural structures. There is a fifth land acquisition strategy I want to describe that is underutilized by people interested in the type of land described in this series. Farm lease, with option to purchase. Thousands of elderly farmers across rural America own land they can no longer actively farm. They do not have family members interested in taking over. They need income, but don't want to sell outright due to capital gains taxes. A lease with option to purchase provides the farmer with annual income while preserving their ownership and collateral position for future care costs. Gives the leaseholder the right to purchase the property at an agreed price within an agreed time frame. For the household building these practices, a farm lease provides access to land for garden establishment, beehive installation, and mushroom log systems. You can begin a soil building program without requiring the capital for full acquisition. The lease period is typically 3 to 5 years. This is the time to demonstrate stewardship and build the relationship with the landowner that may produce favorable purchase terms. Elderly farmers will often sell to a leaseholder who has been a good steward and who they know personally as a trustworthy neighbor. The lease-to-own approach is the functional equivalent of the Amish community relationship strategy applied in a non-Amish context. The demonstration of trustworthiness is the quality of land stewardship. Favorable terms reflect the landowner's trust in you to continue their legacy. The land market reality is that ideal land at straightforward prices is not widely available near major population centers. Lancaster County is one of the most agricultural, land-scarce, and land-expensive areas in the eastern United States. For someone without existing relationships in expensive areas, different strategies apply. The first is geographic flexibility. Affordable land is found in the rural counties of the Mid-Atlantic interior, the Ozarks, and the hill country of Tennessee and North Carolina. 3 to 10 acres of south-facing, water-accessible land in these regions is available in the $30,000 to $80,000 range in 2024. A household with several years of savings and relationship building can access this price range without a 30-year bank mortgage. The second strategy is the land contract. This is a direct purchase agreement where the seller finances the purchase rather than a bank. The buyer makes payments directly to the seller over typically 5 to 15 years at a negotiated interest rate. For sellers wanting steady income rather than a lump sum, or buyers with local trust, land contracts reflect relationships rather than the credit market. The third strategy is the community land trust. Community land trusts are nonprofit organizations that hold land in permanent trust and lease it to households at below-market rates in exchange for the household maintaining the land according to the trust's stewardship standards. Community land trusts exist in most American states and are most developed in areas with high land prices where the affordable housing mission of land trusts has generated institutional development. Several community land trusts have explicit agricultural and food production missions that align with Amish system principles. The household that lives on a community land trust property does not own the land in the conventional sense, but the household has secure, affordable access to the land for occupancy and can implement every system without any constraint from typical stewardship standards. The fourth strategy is cooperative land ownership. 3 to 5 households acquiring land together and managing it as a shared agricultural system is a model that significantly reduces the individual capital requirement for land acquisition while providing the scale necessary for the complete system including livestock rotational grazing. Cooperative land ownership requires the same mutual trust and community relationship that the Amish mutual aid network is built on. It is not practical between strangers. It is natural among households that have been practicing community network principles and have established trust. Let me close with the most important thing I have learned. The land is not the beginning. It is the culmination. Every family I visited came to that land with practices already running, knowledge already embodied, and relationships already built. I want to give you the complete 7-year preparation timeline because it is specific enough to be a plan rather than an aspiration. Year 1. Start the 4 practices: fermentation, medicine cabinet, worm bin, family book. Begin the savings discipline by automating a 15% transfer. Begin attending community events like farmers markets, community gardens, and seed swaps. These are where you will find your network. Year 2. Add a container garden or community plot. Start a neighborhood tool inventory and urban foraging practice. Begin geographic research. Where is the land at your price range? Attend land auctions not to buy but to learn the market classroom. Year 3. Skills development. Take hands-on building, fermentation, and beekeeping courses. Embodied knowledge moves into the body through direct practice. Identify land characteristics and visit properties. Stay in touch with your network. The person who finds your land is someone you met in Year 1. Year 4. The savings account has approximately $40,000 to $60,000 in it if the 15% discipline has been maintained. This is not enough to buy land outright. It is enough to demonstrate serious intent to a seller considering a land contract. Begin having direct conversations with elderly landowners in your target region. Not purchase offers. Conversations. Learn their situation. Understand what they need. The lease-to-own structure provides them with income and security, while giving you access to the land you want to steward. Some will say no. Some will be interested. The one who is interested is the beginning of the path. Year 5. If the lease-to-own conversation has produced an agreement, you are now on the land you will eventually buy. The practices move to the land. The root cellar materials go in. The first beehives are established. The first garden beds are built. The family book gains its first land-specific entries. The soil test establishes the baseline. The system begins amplifying your previous practices. Years 6 and 7. The system begins producing at scale. Land lease payments are manageable because they are lower than a bank mortgage. Food production is reducing bills. Energy systems are being installed incrementally from savings redirected from the land account to the installation account. The community network on the new property is building. The family book is filling with land-specific observations. Year 7. The land contract or formal purchase closes. The household owns land free and clear or with a modest community loan. The total cash paid is substantially less than the $479,000 that the same property would have cost through a standard mortgage. The practices from the apartment are now amplified. The Tuesday keeps coming. The root cellar is full. The hives are in production. That is the path. That is what the Amish transition from no land to first land looks like when it is done correctly. The cabinet maker is 33 now. At 35, he will own 3 acres free and clear, built on years of saving and practice. Start the practices today. The land will recognize you when you arrive. Drop in the comments what year of the timeline you are in. Year 0, 2, 4, or 7. Let's build this map together. Next, we'll address the operational guide for years 1 through 3 on the property. Stay close.